Set your clock back to 9:30 this morning and watch the 2 hours that followed, because that window held the whole tell. Into the open, about $9 billion of dealer hedging demand flooded through the S&P 500 before 11:30, the strongest one-day reading in a month, and it lifted the index 0.8% off its low. Now, here is the part the green close hides. Most of that record demand was not buying, it was selling. Roughly $5 billion of it came from traders selling same-day downside insurance. Another $4 billion from reaching out to longer-dated calls. And every dollar of it went to work the afternoon before a Federal Reserve decision the market itself treats as a coin flip. This is the Algo Index market close for Tuesday, July 28th. The story tonight is not where price finished. It is what got sold to lift it there. The index closed up 0.2% near 7,429. The Nasdaq fell about 1%. And the fear index eased to 18 2/10. Count with me. 3 things sit between tonight and 2 o'clock tomorrow afternoon. 1. The flow, and why a record pile of demand is really a bet on quiet. 2. The single loudest options position on the board, which never touched the index at all. 3. The one price that decides which way Wednesday cracks open. We take them in that order, then we set up the Fed. Numbers first, the fuller story second. The S&P 500 settled near 7,429, higher by 0.2%, on a session that never spanned more than 0.9% top to bottom. Beneath it, the split was wide. The Nasdaq gave back about 1%, semiconductors dropped 5%, and the Dow ran roughly 1% the other way. The fear index slipped to 18 2/10, yet its own volatility gauge held near 99, which stays on the high side. Options positioning leaned protective, with puts over calls at 1.2 by volume and 1.3 by open interest, while the price of that protection by rank sat near the bottom quarter of its year, calm on the outside, crowded underneath. This is the center of the whole session, so give me a minute here. 3 forces moved it, and each one carries a number. First and largest, the flow. Real-time dealer hedging demand ran about $9 billion for the day, the biggest single reading in a month, and nearly all of it landed before 11:30 this morning. But pry it open and the direction flips. Close to $5 billion of that was traders selling same-day puts, and roughly $4 billion was buying longer-dated calls. Selling a put means collecting a premium to promise you will step in if the market falls. Doing $5 billion of that the day before a rate decision is a desk wagering in real size that tomorrow stays boring. That is the tell. The record demand was insurance being sold, not fear being bought. Second, the gamma state, and this is the fragile part. Dealers are now net short gamma, with the flip level sitting at 7,425, just 4 points under tonight's close. Above that line, hedging leans against moves and settles them down. Below it, the same hedging turns and feeds them. The market is resting almost exactly on the hinge, which means a small shove tomorrow does not stay small. Third, leadership, which came apart on purpose. Semiconductors fell 5%. 2 former memory favorites are down 37 and 55% from last month, and the Nasdaq has slid into correction. The money did not leave, it relocated, into healthcare, into staples, into the Dow. The plus sign on the index is simply what remains when one half drops and the other half catches it. Retrace the session with me, level by level. Cash opened near 7,413 and sold straight down to a 950 low of 7,385. And that is exactly where the morning wave of hedging demand met it and built a base. From there, it climbed all morning and tagged a 1 o'clock high of 7,452. To the tick where the volatility inflection sits, then drifted back to finish at 7,429. 2 numbers frame tomorrow. Below is that base at 7,385, defended 4 separate times. Above is one line that outranks the rest, 7,450. The risk pivot, the one-day pin, and the highest conviction magnet on the board all stack on that single price. And the pivot that ran the market for the back half of last week has stepped right up to it. Cash closed 21 points beneath it. The clean map, support at 7,400, the shelf at 7,300 under it, the hinge at 25, and the whole decision resting on 50. The standout options ticket today never touched the index, Someone opened a fresh position of 1100 Dow 525 calls, a straight wager that the Dow keeps outrunning technology, and it paid inside the session. The Dow rose about 1%, and those calls jumped from 360 to 490, up 36% before the bell. On a day the chips were breaking, the boldest money went hunting for the exact opposite trade and got paid the same afternoon. The rotation you keep hearing about, written as a single ticket. Sentiment sits underneath all of this. Protection is not expensive right now. The price of options by rank rests in the low quarter of its year, and the defensive lean and put positioning is steady rather than scared. But that calm is priced for today, not tomorrow. The options market has both Wednesday and Thursday marked for intraday swings near 1.2% each, roughly double an ordinary session, which tells you plainly where the desks think the real motion lives. Not in tonight's quiet, but the second the decision prints. That gap between today's calm and tomorrow's price motion is the entire setup. It does not hand you a direction. It only tells you the direction is coming. Our desk went 3 for 3, and everyone closed at our own chart-level target. A discretionary long into the morning base for 10 points, an automated long off that same level for 7.5, and a short into the midday high managed by hand for 5.5 more. Single leg, defined risk, each one. We also armed 2 more setups and canceled both at 0 cost when the price we wanted never traded. Because a plan that never triggers is not a loss. It is discipline doing its job. The honest framing. These are reads on levels, not a guarantee on any single options dollars. What made today work was a map that called the low to within 3 points and the high to within 1, and the patience to only act when price came to us. What I am watching tomorrow is one thing, whether 7,450 gets reclaimed before 2 o'clock, or the market walks into the decision from below. This is the biggest day on the calendar, so let us set it up properly. At 2 o'clock, the Federal Reserve decides, and this one is genuinely live. Futures put it at 68% for a hold and 32% for a hike. And a 1 in 3 chance of a hike this late is not something the market usually strolls into. Think of it as 2 roads. A hold is mostly expected, so a hold likely triggers a relief push towards 7,500 and above. A hike is the outcome almost nobody is positioned for. And with dealers already short gamma below 7,425, that road is faster and reaches 7,398, then 76, then 55, quickly. Size for the road you are not on. And the decision is only the first hour. Minutes after it, Microsoft and Meta report, 2 of the largest companies alive. Thursday brings growth and inflation before the open and Apple after the close. And the options market is pricing huge single-name swings into that slate. 12% for ARM, 10 for Lam Research, 7 for Meta, against a history closer to 10. This is a 5-day corridor of the highest impact events a quarter can hold, stacked one against the next. One more thing landed after the bell that belongs on your radar. Just before 6 o'clock, missiles were fired at United States troops in the region, and by the military's account, all were intercepted with no casualties. Crude jumped more than 4% on the headline before easing. The futures barely flinched, and then they recovered back above the line. The read is that the market is treating it as contained, but energy is carrying risk tonight it was not carrying yesterday. And if crude keeps climbing, it quietly eats at the cooling inflation case the doves are leaning on. Here is the map for Wednesday. Resistance sits at 7,500 and then 25. 7,450 is the decision line. The hinge sits at 25, just below it. Support waits at 7,400 and under it, 300. What flips the read constructive is a reclaim of 7,450 that holds. What hands it to the sellers is a decisive break of 7,400 with dealers still short gamma. 3 quick things before we go. Our AI trading journal is free at members.algoindex.com/auth/signup. And it takes any trade you log and marks your fill against the price levels that were truly in play the second you clicked. Our gamma level accuracy tool lives at algoindex.com/tools/gamma level accuracy. And that scorecard stays out in the open, whether it flatters us or not. The complete written recap sits on our blog at algoindex.com/blog, and the trading community works through all of it together on Discord. Tonight, the market sold a record pile of insurance and bet on quiet, and one line above the close decides whether that bet was smart. 2 o'clock tomorrow, we find out together, and we will be right here counting it down with you.